Welcome
The
back to the
violent
AG
spike in
Insider.
silver
This is Captain Silver.
$284.50.
And the violent spike in silver to
Today is not a standard
$84.50
market
today
trade.
is not a
It is
standard
not a
market
technical
trade.
breakout.
It is not a
It is
technical
not a
breakout.
momentum
It is
play.
not a momentum
It
play.
is the beginning
It is
of a
the beginning
desperate
of a
global
desperate
exodus from the dying fiat US dollar. What you are witnessing right now in March of 2026 is the early stage of a currency crisis that is going to destroy the purchasing power of every paper currency on the planet and force the greatest wealth transfer in modern history
from people holding financial assets to people holding physical hard assets.
The macroeconomic conditions that are unfolding right now, the kinetic war in the Middle East, the energy shock from the Strait of Hormuz,
the oil spike toward $150 a barrel. These are not temporary disruptions that the Federal Reserve can manage with monetary policy.
Temporary disruptions.
These are structural shocks that are creating a stagflation nightmare where central banks are completely paralyzed, where they cannot raise rates without collapsing the economy, and they cannot lower rates without triggering hyperinflation. And when central banks are paralyzed, when they have no tools left, when the only option is to print money and pray, that is when fiat currencies die.
When they have no tools
that is when
left,
people lose
when the only
confidence
option is
in
to print
paper
money and pray.
That is when the exodus into physical precious metals accelerates
That is when people
past
lose
the point
confidence
of no
in
return.
paper money. That is when the exodus into physical precious metals accelerates past the point of no return.
Financial advice.
The suits want me to tell you this is not financial advice.
The final
They
rush
are
out of the
correct.
fiat dollar
This
just
is not
started,
financial
and if you are
advice.
still
This is a
holding cash or
macroeconomic
bonds
warning
or
that the
any
final
paper
rush out
asset
of the fiat
denominated
dollar
in a
just
currency that
started.
is
And if you are
being
still holding
debased to
cash or
infinity,
bonds
you are
or any
about to
paper
experience
asset
wealth
denominated
destruction
in a
on a
currency
scale
that is
that
being
most people
debased to
cannot
infinity,
comprehend.
you are about to
Let me know in
experience
the
wealth
comments below
destruction
right now,
on a
because
scale that
as the
most people
purchasing
cannot
power of the dollar
comprehend.
collapses
Let me
this
know in the
week,
comments below
as you
right
watch
now,
food
because as
prices
the
rising,
purchasing power of the
energy
dollar
prices
collapses this
spiking,
week, as you
everything
watch
getting
food
more
prices
expensive while your
rising,
paycheck
energy
stays the
prices
same,
spiking,
I need to
everything
know
getting
where you
more
are
expensive
positioned.
while your
Are you
paycheck
protecting your
stays the
wealth in
same.
tangible
I need
hard
to know
assets
where
like
you are
physical
positioned.
gold and
Are you
silver
protecting
that
your
cannot
wealth
be
in
printed,
tangible hard
cannot be
assets like
debased,
physical
cannot
gold
be
and silver
manipulated by
that
central
cannot be
banks?
printed?
Or are
Cannot
you
be
hoping the
debased,
government will save you?
cannot be
Are you hoping the
manipulated by
Federal
central
Reserve is going to
banks?
fix
Or are
this?
you
Are
hoping
you
the
hoping that
government will
somehow
save
inflation
you?
is going
Are
to magically
you
disappear
hoping the
and everything is
Federal
going to go back
Reserve
to
is going
normal?
to fix
Drop
this?
a comment right
Are
now.
you
Tell me what
hoping
you're
that
holding,
somehow
because your answer to that
inflation
question is going to determine whether
going
you
to
survive the next
magically
phase of this crisis,
disappear
or
and
whether you get
everything is
financially
going to go
destroyed by
back
the
to
greatest
normal?
currency
Drop a
debasement event
comment
in
right
human
now.
history. Now let me
Tell
break
me
down
what
the
you are
stagflation
holding,
nightmare and
because
explain
your answer
exactly why
to that
central banks are
question is
trapped
going
and
to
why that
determine
trap
whether
is the
you
ultimate death
survive the
sentence
next
for
phase
fiat
of
currency.
this crisis,
Stagflation is
or
the
whether you get
combination of
financially
stagnant
destroyed
economic
by the
growth
greatest
and
currency
accelerating
debasement
inflation.
event in human
It is the
history.
worst
Now,
possible
let me break down the
macroeconomic scenario
stagflation
because it
nightmare
puts
and
central banks
explain
in a position
exactly
where they
why.
cannot win.
Central banks are
Let me
trapped,
explain how we got
and why
here
that trap
and
is the
why this
ultimate
different
death
from
sentence
every other
for
crisis
fiat
we have faced
currency.
in the last 50
Stagflation
years.
is the
The
combination of
kinetic war in the
stagnant
Middle East and the
economic growth
blockade
and
of the Strait of
accelerating
Hormuz are threatening
inflation.
to push crude
Is the
oil to
worst possible
$150 a barrel.
macroeconomic
This
scenario
is
because
not
it puts
speculation.
central banks in a
This is the
position where they
market pricing
cannot
in a very
win.
real
Let me explain
possibility.
how we got here
20% of
and
the
why
global
this
oil
is different
supply
from
is
every
going to
other
be cut off
crisis
for an
we have
extended
faced in the
period.
last 50
When
years.
oil
The
goes from
kinetic war in the
$75
Middle
to
East,
$150
the blockade
and
of the
energy
Strait of
costs double,
Hormuz are threatening
that
to
creates an
push crude
unstoppable
oil
energy
to
inflation shock.
$150
Everything
a
that requires
barrel.
energy to
This
produce,
is not
transport,
speculation.
or manufacture
This is the
becomes
market
more expensive.
pricing in the
Food
very
prices
real
spike because
possibility
farming
that
requires diesel.
20% of the global oil
Transportation costs
supply
spike
is
because
going
trucks
to
and
be
ships
cut
require
off
fuel.
for an
Manufacturing
extended
costs spike
period.
because
When
factories
oil
require
goes from
electricity and natural gas.
$75 to
This is supply side inflation,
$150,
and is the
when
most
energy
dangerous
costs
kind of
double,
inflation
that
because it
creates
cannot
an
be controlled by
unstoppable
central bank
energy
policy.
inflation shock.
Let me
Everything that
explain why.
requires energy to
When you have
produce,
demand side inflation,
transport,
when the
or
economy is
manufacture
overheating and people are
becomes more
spending too much
expensive.
money,
Food
prices
prices
are rising
spike
because of
because
excess
farming
demand.
requires
The
diesel.
central bank can raise
Transportation
interest rates to
costs
cool down the
spike
economy.
because trucks and
Higher
ships
rates make
require
borrowing
fuel.
more expensive.
Manufacturing
People spend
costs spike because factories
Demand falls.
require electricity and natural
Prices
gas.
stabilize.
This is supply-side
This is the playbook
inflation,
the Federal Reserve
and it
has
is the
used for
most
decades.
dangerous kind of inflation
supply-side
because
inflation
it cannot be
is different.
controlled by central bank
Supply side
policy.
inflation happens when there
Let
is
me
a shortage
explain
of
why.
actual
When you
physical
have
goods.
demand-side inflation,
When oil production
when the
gets cut,
economy is
when
overheating
supply chains
and
break,
people are spending
when
too
wars
much
disrupt
money and
trade.
prices are
And
rising
you
because
cannot
of
fix a
excess
supply
demand,
shortage
the
by
central
raising
bank
interest
can
rates.
raise interest rates to cool
Raising
down
rates
the
does not
economy.
create more oil.
Higher
Raising
rates
rates does
make
not
borrowing
open the
more
Strait of
expensive.
Hormuz.
People
Raising
spend
rates does
less.
not end the war.
Demand falls.
All raising rates does is make
Prices
the economy
stabilize.
worse by making
This
it
is the
more
playbook
expensive to
the
borrow
Federal
money
Reserve
and
has
invest
used
and
for
grow.
decades. But
So here is the
supply-side
trap the
inflation
Federal Reserve
is
is in right
different.
now.
Supply-side
On one
inflation
hand, they are
happens
facing
when there is a
massive
shortage
inflation
of
because
actual
oil is
physical
spiking
goods.
toward $150.
When oil production gets
Food
cut,
prices are
when
rising.
supply chains
Energy
break,
prices are
when
rising.
wars
Everything is
disrupt
getting more
trade,
expensive.
and you
you cannot
Normally,
fix
the
a
Fed
supply shortage
would raise
by raising
interest rates aggressively to fight that inflation.
Raising
But
rates
here
does
is the
not
problem.
create more oil.
The underlying
Raising
economy is
rates
crashing.
does not open the
The
Strait
stock
of
market just
Hormuz.
lost trillions
Raising
of dollars
rates
in a matter of days.
does not
Consumer
end the
confidence
war.
is collapsing.
All raising
Business
rates
investment
does
is freezing.
is make the
The
economy worse
geopolitical
by
uncertainty is
making it
causing
more
everyone to pull
expensive
back and wait and
to
see what
borrow
happens
money.
next.
And
If the Fed
invest,
raises interest rates
grow.
right now,
So
if they
here is
make
the
borrowing
trap the
more
Federal
expensive in the
Reserve
middle
is
of an
in right
economic
now.
contraction,
On one
they are going
hand,
to instantly
they are
collapse the
facing
debt-based
massive
economy.
inflation. because oil is spiking toward $150. Food prices are rising. Energy prices are rising. Everything is getting more expensive. Normally, the Fed would raise interest rates aggressively to fight that inflation.
When interest rates go up,
but here is the problem. The underlying economy is crashing. The stock market just lost trillions of dollars in a matter of days. Consumer confidence is collapsing. Business investment is freezing. The geopolitical uncertainty is causing everyone to pull back and wait and see what happens next. If the Fed raises interest rates right now, if they make borrowing more expensive in the middle of an economic contraction, they're going to instantly collapse the debt-based economy. And let me be very clear about what a debt-based economy means. The United States has $38 trillion in national debt. Corporations have record levels of debt. Consumers have record levels of debt. The entire system is built on borrowing. When interest rates go up, the cost of servicing that debt goes up. The government has to spend more money on interest payments. Corporations have to spend more money on interest payments. Consumers have to spend more money on their mortgages and credit cards. And when everyone is spending more money on debt service, they have less money to spend on everything else. Consumption falls, investment falls,
and the central bank cannot fix it.
Growth
They cannot raise rates
collapses,
without killing growth.
businesses
They
fail,
cannot lower rates without killing
unemployment
the
spikes,
currency. They are paralyzed.
the economy
When the
goes
central
into
bank is
recession
paralyzed,
or
when
worse,
they have no
so
good
the Fed
options,
cannot raise
when every
rates
choice
without
they make
causing
leads
a
to disaster,
catastrophic
that is when
economic
confidence in the
collapse.
fiat currency
But
starts to
here
break.
is the other side of the
That
trap.
is when people start
If they do
asking
not
those
raise
dangerous
rates, if they keep
If the
rates
central
low
bank
or
cannot
even
control
lower them to
inflation,
try to
they cannot
stimulate the
protect the
economy,
purchasing power of the
they make the
currency.
inflation
Why should I hold
problem
this
worse.
Why should I
Because
trust
low
paper
rates
money that
mean
loses
cheap
value every
money.
single day
Cheap
while
money
people charge have no
means
solution?
more borrowing.
And this is exactly
More
where we are
borrowing
right
means
now in
more
March
money
2026.
chasing the same
The Federal
limited
Reserve is
supply of
trapped.
goods.
Jerome
And when you
Powell
have
is
more
trapped.
money
Every
chasing
central
fewer
bank on the planet
goods
is trapped.
because oil is
They are all facing
expensive
the same
and
nightmare
supply
scenario.
chains are broken
Energy-driven
and production
inflation
is
that they cannot
constrained,
control combined with
prices
economic
go up
weakness
even
they cannot
faster.
fix.
You
And
get
the only tool they have
runaway
left is the
inflation.
printing press.
You get
The only thing they can do
hyperinflation.
is
You
create
get the
more money,
purchasing power of the
inject more
currency
liquidity,
collapsing.
try to prevent a total financial
This
collapse
is the
by flooding the system
stagflation
with
trap.
paper currency.
The economy is
But every
stagnating.
dollar they print
Growth
makes the dollars you
is
are holding
slowing
worth less.
or negative.
Every
But
round of
inflation is
quantitative
accelerating
easing, every
because of
emergency
supply
liquidity
shocks,
injection,
and the
every
central
bailout,
bank
it all dilutes the
cannot
currency.
fix it. They
It all
cannot raise
transfers
rates
purchasing
without
power from
killing
savers
growth.
to debtors,
They cannot lower
from the
rates
middle
without
class to the
killing the
financial
currency.
elite, from people holding cash to people
and when
holding
the
hard
central
assets.
bank is paralyzed,
Let me give you some
when they
historical
have no good
context so you
options,
understand that this is not the
when
first
every
time this
choice
has
they
happened,
make leads
and
to
we know
disaster,
exactly how this story
that
ends.
is when confidence in the fiat
In the
currency starts to
1970s,
break.
the United States
That is
faced
when
a
people
very
start
similar
asking the most
situation.
dangerous
Oil
question.
prices
If
spiked
the
because
central
of the
bank
Arab
cannot
oil
control
embargo and the
inflation,
Iranian Revolution.
if they cannot protect the
Energy costs
purchasing
went
power
vertical.
of the currency,
Inflation
why
accelerated
should I
into the
hold
double
this
digits.
currency?
But the
Why should
economy
I
was
trust
weak.
paper money
Growth
that is
was
losing
slow.
value every single
Unemployment
day
was
while
rising.
the people in charge
This was
have no
stagflation.
solution? And this
And
is
the Federal
exactly
Reserve
where
under
we are
Paul
right
Volcker
now
had to
in
make a
March of
choice.
2026.
Do we save the
The
currency or
Federal
do we save the
Reserve
economy?
is trapped.
Volcker
Jerome
chose to
Powell
save the
is
currency.
trapped.
He raised
Every
interest
central
rates to
bank on the
20%.
planet is trapped.
He crushed
They are all
inflation.
facing the same
But he
nightmare
also caused the
scenario.
worst recession since the
Energy-driven
Great
inflation
Depression.
that they cannot control,
Unemployment hit 10%.
combined with economic weakness
Businesses
that they
failed.
cannot fix.
People
And
lost
the only
their
tool they
jobs.
have left is the
It was
printing
brutal.
press. The only
But it
thing they
worked.
can do is
The
create more
currency
money,
stabilized.
inject more
Inflation
liquidity,
came down.
try to
And
prevent a
eventually the
total
economy
financial
recovered.
collapse
But
by
here is
flooding
the
the
critical
system with
difference
paper
between the
currency.
1970s
But every
and
dollar
today.
they print makes the dollars
In the
you are holding worth
1970s,
less.
the United
Every
States
round
had
of quantitative
33%
easing,
debt to GDP.
every emergency liquidity
Today,
injection,
we have
every bailout,
130% debt
it all
to
dilutes
GDP.
the currency.
In the
It all transfers
1970s,
purchasing power
interest rates
from
could go to
savers to
20%
debtors,
without
from the
immediately
middle class
bankrupting
to
the
the
government.
financial elite.
Today,
From people
if
holding
interest
cash
rates
to
go to
people
even
holding hard
10%,
assets. Let me give you
interest
some
payments on
historical
the national
context
debt
so you
would
understand
consume
that this
the
is not the
entire
first
federal
time this has happened,
There would
and we
be
know
no
exactly
money
how
left
this
for
story
anything
ends.
else.
In the
No
1970s,
Social Security,
the United
no
States
Medicare,
faced a very
no
similar
defense spending,
situation.
no
Oil
infrastructure.
prices spiked
Nothing. The government
because
would
of the
default.
Arab oil
The
embargo and the
entire
Iranian
system would
Revolution.
collapse. So the Fed cannot
Energy
do what
costs
Volcker
went
did.
vertical. Inflation
They cannot raise
accelerated
rates to
into the double
20%
digits.
to crush inflation.
But the economy
They cannot
was
even
weak.
raise rates to
Growth
10%.
was slow.
They are trapped at low rates or they blow
Unemployment
up
was
the debt.
rising.
But low rates mean inflation
This
accelerates.
was stagflation,
Low
and
rates
the
mean
Federal
the
Reserve
currency
under Paul
continues to lose
Volcker
purchasing power.
had to make a choice.
Low
Do we
rates mean
save
we
the
are on a path
currency
to
or do we
hyperinflation
save the economy?
and currency collapse.
Volcker chose to
This
save the
is the
currency.
stagflation nightmare.
He raised interest rates
and it
to
is the
20%.
final phase of a fiat currency
He
system
crushed
that
inflation,
has been
but he
abused
also
beyond
caused
the
the
point
worst
of
recession
sustainability.
since the Great Depression.
Mainstream economists are
Unemployment
going
hit
to lie to you
10%.
and say the Federal Reserve has
Businesses
everything
failed.
under control. They are going to tell
People
you that
lost their
inflation is
jobs.
transitory.
It
They are going to
was
tell you that the
brutal,
economy is
but
resilient.
it worked.
They are going to tell you that there is no comparison to the 1970s or to Weimar Germany or to Zimbabwe or to Venezuela or to any of the other currency collapses that have happened throughout
history.
Even
with rising inflation.
They are lying.
Let's talk about the 1970s.
They are lying because they work for the same system that is collapsing.
People faced serious inflation.
They are lying because their
there's a
careers
critical
depend on
difference
maintaining
between
confidence
then
in the fiat
and now.
currency.
In the 70s,
They are lying because
the
if they
United
told you the
States had a
truth,
2
if they admitted
GDP
that the central
ratio
banks
of
are
about
trapped
33%.
and the currency is doomed,
Today,
there would be mass panic
that
and the
number
system would
has
implode immediately.
skyrocketed to 130%.
If this channel's mission to bring real macroeconomic truth
This is
to
a
the public
massive,
helps you see through the lies,
game-changing difference.
if it helps you understand
Think about it
what is
this
really
way.
happening and position your wealth accordingly,
Back in the
then consider hitting
70s,
that
Federal
super thanks
Reserve
button below
Chairman
to
Paul
support this
Volcker
work.
could raise
This
interest
is the only
rates
way I
to a
can stay
staggering
independent and
20%
keep
to
telling you
fight
the truth the
inflation.
mainstream
It
will
was
not tell
tough,
you.
but the
Now, let me
government
give you
could
the action
handle
plan
it without
because
going
understanding the
bankrupt.
problem is
Today,
useless if you do not know how to protect
it's a
yourself.
completely different
The massive
story.
smart money,
If interest rates were to hit
institutional
even
investors, the sovereign
10%,
wealth funds,
the interest payments on our
billionaires who
national
understand
debt would
macroeconomics
consume
and
the
central
entire
bank
federal
policy,
budget.
they
That
all
means
understand
no
the
money
central
for
bank
anything
paralysis.
else. No social
They understand that
security,
the Fed is trapped.
no Medicare,
They understand
no
that
defense,
stagflation
no
is
new
here.
roads or bridges.
They understand that the
nothing.
fiat dollar is entering its terminal phase. And that is why they are
The
rushing
government
into
would
physical
default,
silver and
and
gold.
the entire financial
That is why we
system as
just
we
saw
know it
silver
would
spike to
collapse.
84.50.
So,
That
the
is why gold
Fed's
is at all-time
hands
highs.
are tied. They
That
can't
is why
do
the
what
premiums
Volcker
on
did.
physical metal
They
are
can't
rising.
raise rates to 20%.
Because the people who understand
or
what is
even
happening are getting
10%
out of paper
to
and
crush
into physical
inflation.
as fast as they can.
They
The
are
paper dollar is
trapped.
about to
They
lose
have
its
to keep
status as
rates
the global
low,
reserve currency.
or they risk blowing
BRICS
up the
nations are
mountain
building
of debt
alternative
we've
trade settlement
accumulated.
systems
But
backed
here's the
by gold.
catch.
China is accumulating
Keeping rates
thousands
low
of tons of gold.
just fuels the
Russia's
fire of
accumulating
inflation.
gold.
It means the dollar
Central
in your
banks around the
pocket,
world are accumulating
the money
gold
in your
at the
bank
fastest
account,
pace in decades.
keeps losing its
Why?
purchasing power.
Because
This is
they
the
know
path
what is
to
coming.
accelerating inflation.
They know that the dollar
a
is going to lose
stagflationary
purchasing
nightmare.
power.
And
They know
potentially
that
even a
holding
currency
US Treasury
collapse.
bonds is a
We're in
losing
the
trade.
final phase of a
They know
fiat
that the only way
currency
to
system
preserve
that's
wealth
been
through a currency
stretched beyond
crisis
its
is to own
limits.
assets
Now,
that cannot be printed.
you're going to hear a lot
And
of
here
noise from
is what you
mainstream
need to
economists. They'll be on TV.
Holding cash in the bank right now is financial
telling you not to
suicide.
worry. That
Every
the
day
Federal
they hold
Reserve
dollars,
has everything under
every
control.
day they hold
They'll tell
euros,
you inflation
or
is
yen,
just
or
temporary,
pounds, or any
that
fiat
it's
currency,
transitory.
you are losing purchasing power.
They'll say our economy
inflation
is
rate is
strong and
accelerating.
resilient.
Food
They will
is getting more
dismiss any
expensive.
comparisons
Energy
to
is
the
getting more
70s
expensive.
or to historical
Everything is getting
currency
more
collapses like Weimar Germany,
Your cash is not growing.
Zimbabwe,
Your
or
savings account is
Venezuela.
paying maybe
But
1
you
or
have to
2%
ask
interest
yourself,
while real inflation
why
is
are they
running at
saying
10 or
this?
15 or 20%,
Many of them work within
depending
the
on how
very
you measure
system
it.
that is
You're
teetering on
losing
the edge.
10 to
Their
15%
jobs,
of your purchasing
their
power every single
reputations
year, and that rate is
depend
about
on
to
maintaining
accelerate as the
public
stagflation
confidence
crisis
in the
deepens.
fiat currency
You
system.
must convert melting
They have
fiat
to
currency into tangible
project
debt-free
calm.
physical metal
If
before
they
the
told you the
hyperinflation cycle
unvarnished
becomes
truth,
obvious to the general
They
public.
admitted that central
Because right
banks
now,
are trapped,
most people do
and
not
our
understand
currency
what
is
is
in
happening.
serious trouble.
Most people are not paying
It would
attention to the
trigger
Connect
mass
Vault data
panic.
or the Federal Reserve balance sheet or the geopolitical
The system could
situation.
implode overnight.
Most people are just
That's
living
why
their
I
lives,
started
going
this
to work,
channel
paying
to
their
bring you
bills,
the
assuming
real
that everything's going to be fine.
macroeconomic truth, to help you
But
see
when oil hits
through
$150,
the official
when
narrative,
gas is $10 a
understand
gallon, when
what's
food
really
prices have
happening.
doubled from
If
current
this
levels,
mission
when the
helps
economy
you
is in
protect
recession
your
and
wealth,
unemployment is
please
spiking,
consider
the government
hitting
is printing
that
trillions of
super
dollars to
thanks
bail out
button
banks and
below.
fund the war.
It is the
That is
only
when the
way
general
I can
public is
stay
going to
independent and
That
continue
is
to
when
share
everyone is
the
going to rush
analysis
into
that the
physical assets all
mainstream
at the same
media
time.
will
And
want.
by then, it will be too late.
All
The
right,
premiums will be
understanding the
astronomical.
problem is
The
one
dealers
thing.
will be sold out.
But what's
You
the
will
action
not be able to
plan?
get metal
What
at
can
any
you do to
reasonable price.
protect
This is
yourself?
your window.
It's
This
useless
is the
to
time
know
when the
about
smart
the
money is
storm if you
positioning
don't
and the
know how
general
to
public
build
is
a
still
shelter.
asleep.
The
This is
smart
the time
money
when
is
you can
already
still buy
moving.
physical silver at
We're talking
$84
about
with premiums in
institutional
single digits.
investors,
This is the time
sovereign
when dealers still
wealth
have
funds,
inventory. This is the
the
time
billionaires
when you
who
can still
truly
convert your wealth
understand
into physical wealth before the rush
macroeconomics
starts.
and central
Do
bank
not wait for
policy.
confirmation.
They see
Do
the
not wait
writing
for your
on the
financial
wall.
advisor to tell you.
They
Do not
understand
wait
the
for
Fed
CNBC
is
to admit
trapped,
that we are in a
that
currency crisis.
stagflation is here,
Because by the time those
and
things
that the
happen,
fiat dollar is
opportunity
entering
will be
its
gone.
terminal phase.
I am going to be tracking
And
the Federal Reserve's next
what are they
panic moves,
doing?
and the
They're
inflation
rushing
data
into
as
hard
it drops every
assets,
single month.
specifically
The
physical
CPI,
silver and gold.
the PPI,
This
the
isn't
energy
a secret.
prices, the food
That's why
prices,
we've seen
the wage
silver
data,
prices
all of
spike
it.
dramatically.
I am
That's
watching
why
it in real
gold is
time,
hitting new
and I am
all-time
going to be
highs.
breaking it
That's why
down
the
for this
premiums you
community,
pay for
so you
physical
understand
coins and
exactly
bars
how
are
fast the
rising.
currency
The
is losing
people who
purchasing
understand understand the game are getting out of paper assets and into physical metal as fast as they can. They know that in a crisis, the promise to pay is not the same as holding the real thing in your hand. Let's look at the bigger picture. Beyond just individual investors, the US dollar is on the verge of losing its status as the world's global reserve currency. This isn't just speculation. The BRICS, nations Brazil, Russia, India, China, and South Africa are actively building alternative trade systems backed by gold. China has been accumulating thousands of tons of gold.
When central banks are paralyzed and governments are desperate.
Russia is doing the same. Central banks all around the world are buying gold at the fastest pace in decades. You have to ask, why?
This happened in every single hyperinflationary.
They know that holding U.S. Treasury bonds is becoming a losing game as the dollar loses its purchasing power. They know the only reliable way to preserve wealth through a major currency crisis is to own real assets that KOENB created out of thin air. So what does this all mean for you? For your savings? For your future? I'm going to be blunt. Holding cash in a bank account right now is like standing on a melting iceberg. Every single day that you hold dollars, euros, yen, or any other fiat currency, you are losing purchasing power. The official inflation numbers are bad enough, but the real inflation you feel every day is much worse. The cost of food is soaring. The cost of energy is going up. Your grocery bill, your gas bill, everything's getting more expensive. Meanwhile, your cash is just sitting there. Your savings account might be paying you 1 or 2% interest, if you're lucky. But when real inflation is running at 10, 15, or even 20%, you're falling behind fast. You are effectively losing a huge chunk of your wealth every single year just by holding cash. And as this stagflation crisis gets deeper, that rate of loss is only going to accelerate. It's time to wake up and take action to protect what you've worked so hard to build. Thanks for watching. And be sure to subscribe for more insights on how to navigate these turbulent times.
I will see you in the next video when we track the Federal Reserve's response and monitor the acceleration of the currency crisis.